And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. Quick request to start out here. If you could take a minute and don't forget to hit that like button, comment below, and subscribe if you haven't already. Your engagement may help bring other investors to the table, and my work is designed to help people in their investment journey so we can help others. Now, let's go ahead and take a look at some of that headline news that drove price action last week. First up, we did get employment data on Wednesday. It was private ADP data, and it showed a cooling off in hiring, and this did bring the markets down midweek. Also, we had tariff fears re-emerge, and this is because China and the US are back speaking as far as trying to negotiate some sort of line in the sand with these tariffs. Unfortunately, there was not anything that was decided upon. Investors are on the lookout for a resolution there so that we can advance beyond these fears. More recently, the spat between Trump and Musk is rattling the markets as well, although not seemingly as much as Thursday. Today, the markets are experiencing a nice rally day. Also, we did get jobs reports today, broader job employment data, and that was good news because we did see that hiring slowed, but it was less than expected. And then also unemployment rate did stay steady. Now, next week, you will want to be aware that we are going to be getting key inflation data by way of PPI and CPI data. And then also consumer sentiment is going to come out later in the week. We do have some earnings reports from key tech names, Oracle and Adobe. So that will be front and center going into next week. But let's go ahead from here and take a look at what shaped up last week as it relates to sector and industry group rotation, all about where that strength is. And from here, we're going to take a look at that S&P 500 and see where did we close for the week. And here we are with the daily price chart of the S&P 500. And as you can see, we did have a nice base breakout of a 2-week base in the S&P 500, quite constructive. We also have a positive RSI and MACD. However, of note is we are seeing a bit of flattening here, indicating that this swift upside momentum has shifted to a more orderly rise. But in the end, good news for the broader markets. From here, we can go ahead and take a look beneath the hood. We want to see where and what is driving these markets higher. So we have the 11 underlying sectors in the S&P 500 rated by relative strength and then in descending order. So from here, we can see industrials up at the forefront, which may be surprising considering what another strong week technology had was up 3.1%. But what I will do as we move through today is share with you precisely what is driving the industrial sector higher, as well as technology. We can also see that communication services are up here at the forefront. So these are your three sectors that are outperforming the S&P 500. But let's go ahead and move through and take a look at another strong group, and that is the basic materials, XLB, up 1.5% this week, and I will share with you why we are seeing a move into these materials stocks. Financials inching up higher. We did see a little bit of a rally today in some of those bank names. And then moving through, of course, you do want to be aware of those weaker areas. I will tell you that energy is up about 2%. Oil prices are on the rise. Also, we do want to take a look beyond these sectors at some of these industry groups that are underlying these sectors, because you really want to be able to refine your search. It's one thing to know which areas are leading the markets higher, but equally or more important is being able to refine that a bit more. So we did not talk about consumer discretionary. Tesla got hit this week. That group was down about 1%, but we are seeing nice vibrancy in retailers. They're up about 2.5% this week, XRT. Again, this is another area I will share with you some of the drivers there as it relates to that nice move into these retailers. Also, we have the NASDAQ up here. The NASDAQ is leading, and this is all about tech. And then also those Magnificent Seven stocks. They have been performing last week better than the markets. That's one of the key drivers. And then, of course, technology and other growth areas. Also, we can see small caps. They had a very good week last week, up almost 3%. Here's a gap up today. And we did experience a nice 3-week base breakout in small caps. A lot of that will be financials, but other areas moving to the forefront in that small cap space. Then when we take a look at, for instance, biotech stocks, IBB is the ETF that I use, and it was up 4.2%. This is a risk on sentiment, but also we are seeing a lot of vibrancy within biotechs, quite simply because we are seeing the passage of new drugs, new developments in that area, a lot of that AI driven. So nice to see biotechs on the move higher. From here, I will share with you home builders had a little bit of a move this week. We can see that the group overall had this rally into today, but still very much down and out. We have negative momentum indicators. Certainly makes sense while interest rates, which we'll take a look at here next, have dropped. They apparently are not quite enough to get these home builders back up and running. We'll take a quick look here at volatility. Good to see that it is dropping. We're at about 17 here. We do want to get below that 18 level to indicate less fear. However, of note is we do still have those trade talks, so hopefully we do not see a resumption of high volatility. Let's go ahead and take a look at those interest rates. This is TNX I'm using for the yield on that 10-year treasury. And you can see that we did have a nice dip. Unfortunately, today we are on the rise. We are back at that 4.5 level. And this is going to be quite critical as it relates to growth stocks and economically sensitive areas as we move into next week's inflation data. From here, we're going to take a look at an overall view. Again, that 2-month daily price chart. We are taking a look at the sectors, also the sub-industry groupings, and the Magnificent Seven. It's one of those all-inclusive, really quite powerful screens that you can access and quite easily create on stockcharts.com. I have a list. You can populate it with those ticker symbols. Let's go ahead and take a look. And indeed, these are the M7 names up here at the forefront that are leading, in particular the NASDAQ. And we can see Microsoft, after that gap up on earnings, continuing to reach new heights. Also, we can take a look at Netflix, which had come out with earnings quite a while ago back here, but is continuing to advance. Lots of bullishness on Wall Street for this particular stock. They are doing a lot of things right. And then last week, we had a nice uptick in Meta. It was up 7% on positive news relating to AI-related spending and other areas. But here we are again with industrials up here, technology, and then we move to NVIDIA, which is still up at that forefront. We are seeing a nice advance. The stock was up about 5% this week. Ideally, we do want to see those trade talks materialize because NVIDIA has talked a lot about potential loss of business to China. So moving through here, not sure if I mentioned semiconductor industry. It is sitting up here with this nice move higher into a gap up. The group was the top performing sub-industry group this week, up 6.3%. A lot of that being driven by strong earnings. And I did add, I believe I'm up to 4 semiconductor stocks on my MEM Edge suggested holdings list, each one of them set up to be a leadership name. So as we move through, you do want to be aware of these weaker areas. Make sure that you're not in these names or overweighted in these groups. First up here is Apple, which has struggled significantly. You can see Apple down here in this lower quartile, a lot of this due to tariff related news and otherwise. Also, you do want to be aware that Tesla fell out of bed last week. I talked about the Trump-Musk spat that is certainly front and center in the news, and that certainly is reducing confidence that Trump would help the company by way of policies. As we move through too, we can also take a look at some of these other areas. Healthcare really got hit hard, a lot to do certainly with managed care stocks, but also the appointment of a new leader for biotech and other spaces. But we have been inching upward. I talked about biotechs on the move higher. The overall healthcare group is also on the move. From here, we can take a look at one of the bellwether healthcare names that has come on quite strongly. Their pipeline is very strong, and they are also winning the overall race with the weight loss medication. So here we are with Eli Lilly LLY. Now, we are not out of the woods yet, but we are now inching into positive territory with this relative strength indicator. We have had that black line up through the red for that MACD, indicating a new uptrend. However, we are very much at potential resistance with this downward trending 50-day simple moving average. So I would need to see a move back above that on big volume to give confidence that we could move higher. However, you can see that it has been quite volatile in line with the overall healthcare group. A lot of that, again, having to do with department head appointments and other areas of policy. I did want to talk about some of these areas that have been on the move higher. We talked about XLY and consumer facing, particularly retailers. So what I wanted to share with you are a couple of names here that are still earlier in their advance. They are experiencing downtrend reversals. So first up here is Live Nation. This company owns Ticketmaster. They provide tickets for live events. And what we can see here is the stock broke back above that 21-day simple moving average. We now have a positive RSI. Nice high volume on this reversal activity. If we can get that black line up through the red, it would provide even more confidence. Another well-known company in this consumer space is Airbnb. And we can see a couple of nice characteristics here with, again, that RSI in positive territory, the stock above each of its moving averages. And then we have that black line up through the red, signaling a new uptrend. From here, we can go ahead and pull up a weekly chart, and you'll see that we are quite early in the potential upside advance. We have seen a significant move this week, so you will want to plot your entry point, but looking quite constructive there. Also, let's go ahead and take a look at industrials. So I talked about this group being a leadership area, XLI. So from here, using ETFs, I will share with you where that strength is. And I will also tell you I have names on my MEM Edge report, which we are up to about 18 suggested holdings. Here we are with the Aerospace and Defense ETF. ITA is the ticker if you're inclined to use an ITF. However, you can see that the advance is fairly sharp already. Here's a weekly chart of that aerospace and defense. And this is all about Trump policy and increased spending on military. There is a bill that is currently sitting in the Senate waiting to be passed. And if it is, that will confirm that sharp increase in aerospace and defense spending. It's also an area where you're seeing quite a bit as by way of innovation that's taking place with these new drone type products and elsewhere. Also, from here with industrials, there is another strong area that has been outpacing the markets. And we are still earlier in this advance. This is PAVE. It's the Global Infrastructure Development ETF. Now, from here, you can go ahead and take a look at those top holdings in PAVE, and you will be directed to stocks. I believe this is in there, Construction Partners, ROAD, but certainly any number of infrastructure names. That's another area that we've been able to embrace as well. I talked about XLB on the move last week. We did see a lot of these metals and other areas moving higher. So let's go ahead and take a look at a couple of ETFs in this area that point you to where that strength is emanating from. Global X Uranium ETF, URA. We can also see a move into copper. CPER is the ticker symbol. We are pulling back a bit today, but overall it is up for the week. These particular stocks are very much needed for energy, whether it's EV related or copper, as far as developing these data centers and so forth. Very, very instrumental part of that process. Also, let's take a look at SLV, which has been SLV, not B. That's going to be silver. And you can see this sharp advance gap up into a base breakout. This is another name that also is in a proxy, or viewed as a proxy, for gold stocks, which are pulling back a bit this week. But certainly of note are some of these other metals. Another ETF that you can use as a way to participate is XME. This is the S&P Metals and Mining ETF. And when you're examining these ETFs, you want to make sure that they have nice high volume characteristics so that you won't get whipped around, and XME is a good example of that. Now, we did talk about XRT, that is the S&P Retail ETF. From here, we can take a look at a couple of names. It is spotty. You do need to pick your points within retail, because I'm going to share with you a couple of names that have gotten hit quite hard. This is not the case. Boot Barn, BOOT, you can see these gaps up on earnings, and we are in the throes of experiencing a potential base breakout here. And you can see that this back and fill period has given the stock time so that it can remove this super overbought and get into a more attractive position. Another retailer that we can take a look at just came out with earnings, and also a Berkshire Hathaway holding, and that is ULTA, ULTA. They did report their earnings last week. Here's that gap up. Now we are seeing a bit of a fizzle, but again, that is not entirely unexpected. This gap up did push this RSI up above 75, which is quite elevated. From here, we can take a quick look at the weekly chart, and you'll see this very sharp advance that we experienced last week. You can use this period at the end of 23 as precedent, and you'll see that oftentimes it will require a period of consolidation before experiencing another leg up. Another name in that same space is ELF, ELF. This is another company that came out with earnings last week. Take a look at that gap up, super high volume. Now, no doubt we are in an overbought position, 85, almost 86 with that RSI. However, I will tell you, if you take a look at the weekly chart of ELF, you will see that we are coming out of a very deeply oversold position. And this is something that I talk about certainly in my trading room. The fact that these big growing companies, they will experience high periods of growth, have these sharp advances. This is that 22 into the end of 23 period, and then another sharp advance into the beginning of 24. What does take place inevitably is that the company comes up against very tough comparison, triple digit growth numbers, so their year over year numbers will falter. However, despite remaining strong, net net, we are still relatively cheap with ELF, certainly compared to historical precedent. Now, another area that within retailers that has not done well, let's take a look at Lululemon. Came out with their numbers here, and you can see that the stock has fallen 20%. And this is all about the company's uncertain outlook for growth going forward. When a stock has an advance, certainly here from this 245 up to 340, you will need to see perfect numbers, a perfect outlook. So we did see, again, this sharp drop on that outlook. From here, I'm going to share with you names that had similar earnings reports also in this retail space. This is Deckers, the UGG boots. Also, they have their famous sneaker Hoka line. And we can see this stock also fell. It actually fell more than 20%, closer to 26% down to this level. But using that as precedent, if by chance you owned Lulu, you can see that it is crawling its way back. We're not in positive territory yet. I will need to see that RSI get up here and then also that black line up through the red. But also you will want to know the core reason why it dropped. And for Deckers, it was the fact that Hoka sales are faltering because they had their huge popularity period. So I'm not as convinced that this will push higher with any real strength, but you will want to be able to use that as precedent. Also, another name that more recently fell out of bed, this is Gap. Here's that huge drop, but it too is also trying to attempting to reverse that very sharp downtrend. You will want to use precedent and other periods. I'll just take a quick moment here to highlight what a downtrend reversal would look like. First up, that MACD crossover, it does not have to be up here in positive territory, signaling a new uptrend. And then also you can see that the RSI got into positive territory as the stock advanced above these moving averages. And in fact, we did see a sharp uptrend from there. If we take a look at where we are now, we are not ready for prime time, but always very helpful to have in your mind a precedent so that you can utilize that when examining your own stock. So we did talk about XLK up there at the forefront. This is all about technology. We looked at semiconductors. Let's take a look at a software security industry group that is among the very large tech space that's been in a nice sharp uptrend. And this is HACK, H-A-C-K. It is the cybersecurity ETF, and we are seeing a lot of nice upside movement in cybersecurity software stocks. Again, my MEM Edge report, we have the top name in that space that is poised for further upside there. And then last up, we can take a look at another area that you may not be aware that has been on the move higher, and that is NTR. As an example, this is a name that specializes in potash, and it is a chemical that is needed certainly for agricultural needs and elsewhere. So NTR is one name, and there certainly are other names in this industry group. A lot of this having to do with strong demand from both China and Brazil, both having economies that are on the move higher or showing and experiencing strength. Last up here, I did want to take a look at Palantir. Many of you may be familiar with this company. It's certainly a big winner. It is a top name on my MEM Edge report, and we can see that the stock faltered this week. This was all about headline news about the US government potentially using Palantir to access data regarding individuals. Now, they did strongly deny that fact, but they have partnered with the US government for other capabilities and applications. But what I wanted to, more importantly at this time, share is that on Thursday, the stock closed below the 10 and 21-day simple moving average. Pretty high volume here, and we did have a negative RSI into the close. So that was certainly concerning. For me, of course, it is one of my bigger holdings, but we can see that it was able to recover today with a nice 5.5% advance. But it did have me looking at this prior period when Palantir faltered. And this is mid-February. We did have this big downdraft day followed by further deterioration. Now, the further deterioration was all about weakness in the broader markets, but taking a look at that first news item where that shoe dropped, in essence, it was all about news that the government had cut their budget, and Palantir does derive a fair amount of their business from the US government. And then also on this day, the CEO announced that he was selling a good amount of his shares. So that was that first drop. And then as we continued to advance, this was February 10th. On February 11th, we did see new tariffs on steel and aluminum come into play. Powell came out with negative comments about interest rates. And then beyond that, on February 12th, we did see CPI inflation. And this, of course, started the downdraft in the overall broader markets. My point here is Palantir was a clear-cut leadership name. You want to keep your eye on those leadership names for signs of weakness. They are oftentimes, when those leadership names begin to deteriorate, it is really quite telling as far as a potential exhaustion among investors and a potential further downdraft. So that is another precedent item that I did want to share with you. But at this point in time, Palantir has regained its near-term uptrend, so we are in good standing there. And that's it for this week. I hope you have a fantastic weekend. I'm going to look forward to seeing you here next Friday.